Welcome back, traders. Welcome back to another Forex Bootcamp training. Today, I wanted to just go over trading plans. Last week, I did mention that I was going to discuss what is a trading plan, how to create a trading plan, steps to creating a trading plan, how important a trading plan is. So I went ahead and asked ChatGPT the same question, and what you see in front of you on the screen here, and I'll read it out, is what the response was to the question that I proposed on ChatGPT. What is a trading plan? But before we get started, if you haven't subscribed to the channel, please do so. Hit the bell button. There you get future notifications of future videos just like this one. That way you get notified when I do another video. I do videos at least once or twice a week. I'm going to try to be a little bit more active throughout the week because I do trade full time. But at the same time, the information that I put on my channel, hopefully you find it valuable, you find it content inspiring, and if you like what you hear and see, don't forget to put a thumbs up for a like. That way, other people can know that you like the video as well. That'd be very much appreciative. But welcome back, all my subscribers. Welcome to all the new subscribers. We're getting closer and closer to 1,000. I really appreciate that. We're over 600 subscribers, which is great. So if you haven't subscribed, please subscribe. Um, Also, tell a friend. That way they can subscribe as well. So let's dive into the content that I want to share with you this week. This week is all about trading plans. So let me read this first and we'll dive into how to create one. That way you know exactly the steps that I've taken to create my trading plan. I'll share some thoughts on it as well. So what is a trading plan? A Forex trading plan is a comprehensive written document that outlines a trader's strategy, goals, risk management rules, and self-discipline guidelines for trading in the foreign exchange market. It's essential. It's essentially a roadmap that helps traders make consistent, rational decisions rather than impulsive ones driven by emotion. It typically includes things like trading goals, or what you aim to achieve, e.g., specific profit targets, learning objectives, risk management, how much capital you're willing to risk per trade, stop loss levels, and position sizing, entry and exit strategies, the specific conditions under which you'll enter and exit trades, currency pairs, which currency pairs you'll focus on, time frames, the time frames you analyze, e.g., daily, hourly charts, trading psychology, how you'll manage emotions and maintain discipline, record keeping, how you'll track your trades and analyze your performance. Having a well-defined plan is critical because the forex market can be very volatile, and without a plan, it is easy to get caught up in excitement or fear and make poor decisions. It helps you stay objective and consistent. Okay? All right, so let's dive into the chart so I can share with you exactly how I went about creating my trading plan and what I look for in the market to execute entries and exits. So we'll go ahead and go to the chart. This is a chart of BTC USD. So this is one of the pairs that I trade, Bitcoin versus the US dollar. Now, I normally have a few pairs that I consistently focus on and analyze. That would be Bitcoin, that would be EU, that also would be gold, and also NASDAQ 100. So those are my four favorite pairs, and occasionally I'll do NAS, um, I mean NZD, USD. So those are the pairs that I normally focus on. Let's focus on Bitcoin here. And one of the things when you're creating a trading plan, number one, get a notebook. Number two, start writing down the steps you would take before you actually execute a trade. It's like a roadmap to success, right? And by all means, once you create that trading plan, try to follow your rules 100% of the time. Not 50%, not 25%, not 10%, but 100%. If certain things don't fall into your parameter of rules, do not place a trade. A smart trade is a good trade. if don't place it if it violates your rules. So let me tell you a little bit more about that. So I normally started at the weekly time frame, and I work my way down to the 15-minute or the 5-minute. The 15-minute and the 5-minute is where I normally would place the trade. Those are where I would enter the trade. But the higher time frames is where you want to analyze the direction of the trade. The higher time frames will tell you whether you're in an uptrend, downtrend, or consolidating going sideways. So it's important that you understand that. So looking at the weekly time frame, we notice that Bitcoin, if you look at the last candle on the right, Bitcoin for the past week was sloping downwards, right? But overall, okay, overall, if we take our trend line, this is a tool that I normally use, you slope it upward, and we'll notice that Bitcoin is in an upward trend, okay? Meaning Bitcoin is making higher highs and not making lower lows. Now, how do we know this? Because if we start from the bottom here, we notice that if we take another tool here, a path tool, we notice that Bitcoin started here, made a high, made a lower high, then another higher high, and it sloped down and made a lower high, and made another higher high, came down and made a lower high because this low is higher than this low. And then it went up, made a higher high right here, and sloped down and made a lower low, lower high, and a higher high. Okay, now it's consolidating. Okay, and we'll normally, when it consolidates, if it's in an upward trend, and that's what we're in right now, it wants to either bounce off the next nearest or one of the fair value gaps or a area of um, an order block. So those are two things we want to look for. So put that in your trading plan. So the first thing you're going to do is analyze the chart based on the weekly. Put that on in your notes, weekly. In the weekly time frame, you ask yourself, okay, what trend am I in? So put that in your trading plan. What trend am I in? You put, I'm in an uptrend, okay, because it's considered an uptrend. Number 3, now that you know the trend, you want to go down to the lower time frames and try to execute or find an entry based on the trend, because you want to trade with the trend, not against the trend, and you want to stay out of the trend if it's in consolidation, meaning it's going sideways. If it's going sideways, it's going to be really hard for you to find an entry. It's going to be really hard for you to make a profit, because once it goes sideways, it bounces up and down, and it's really hard to really monitor that. So stay away from consolidations and sideways movements. But you enter on a retracement. So let's look at that. What is a retracement? A retracement is a pullback, meaning once it makes its higher high, higher than its previous high, it wants to typically slope back down and make a lower high. Okay. So here we have a higher high and a lower high, because this low here is higher than this low, but then it made another higher high. Okay. So let's go down now to the daily time frame. Okay. Because we already know what trend we're in. We're just not looking for an opportunity to take advantage of a continuation of an uptrend. Or if it violates the structure or the trend itself, it may reverse. So you want to pay attention to that as well. And typically, when you look at the lower high on an area in the trend, when the market will reverse, it typically will be at the bottom of the last candle or the lower high candle. And if it violates this area and continues this journey this way, then you have a structure change, a change in structure. So then it may pretty much reverse and go in the opposite direction. So you want to pay attention to this type of movement. If it does this, then it's no longer an uptrend. It's now changing to a downtrend. All right. But if it doesn't do that, right? Now remember, you have to find where is the fair value gap. Now, remember what I mentioned in previous trainings. The fair value gap is an area where 2 candles do not meet in between 3 candles. So this candle here, this candle here, this candle, these are 3 candles, right? 3 blue candles. But the first candle and the third candle the wicks do not touch each other. So what you want to do is create a box between that area, and we're going to call this area your fair value gap area. Okay, so what we're waiting for the market to do is come into this gap because it needs to fill the gap. Okay, and potentially, we don't know exactly if it's going to bounce off the gap, but potentially come to this area, bounce off the gap, and trade and go higher. Okay, and what candle, if you're my previous trainings, what candle would you be looking for off the bounce of a fair value gap? You got it. You'd be looking for a bullish engulfing candle. Once you see a bullish engulfing candle off of this zone, you can anticipate the market to trend or go back and make higher highs. Okay. Is there a guarantee of that? No, because the market will do whatever it wants. It may just continue to trend lower. And but if it does that, you already had set your stop loss. If you're going to take a place a trade going higher, you place a stop loss that we don't blow the account. If it goes against your entry, okay, your order, you've protected your principal. All right, so we'll be waiting for off of the hourly candles here. This is the hourly time zone. You'll be waiting for a pullback. This is the pullback and a bounce off of this fair value gap. Now, when will it happen? We don't know. You can set alerts and say, hey, once the actual market gets to this area, please let me know by text message or email. And TradingView does have that option. You can actually set an alert. If you go to the right panel, click the clock, you can set your alerts here. Okay, alerts from last week. Let me go ahead and delete those alerts. And you just set a new alert by clicking this plus button and letting them know, okay, what certain parameters. If it gets into that parameter, then you look at the charts, come back to the charts and see if you can enter the trade based on your parameters. Okay. Now, let's go down to the lower time frames and see what's going on, because we see there's a retracement going on, right? A pullback to an area where the market needs to fill, right? Order gaps, because this fair value gap basically means there's orders that hasn't been filled. So the market makers has to pull it back, collect those orders, and hopefully bounce off the fair value gap and continue its journey higher, since Bitcoin is in an enough trend. All right. So let's go down to the 4-hour time frame now. Okay. So as you can see, it is a serious pullback, right? Now, like I said before, even if you look at the 4-hour gap and you adjust everything here, like this could be the fair value gap, you adjust it from the daily, and we do see another fair value gap right here between these three candles. You pull this all the way over to the right, you notice that this gap is being filled as we speak. Okay. And what did I say you look for in order to execute a trade in this particular fair value gap? Well, you're looking for a bullish engulfing candle, which is this candle that's being formed right now. So this candle is bigger than the candle previously. Now, there's actually 2 hours left before this candle has to close. But if this candle closes higher than the previous candle, then you want to consider entering the trade, okay? Because this is a bullish engulfing candle, and that basically means that it's bouncing off the fair value gap, which is in the fair value gap right now, and may trade higher off of that bullish engulfing candle. But if it does not, you also want to pay attention to the zone where we created on the daily. If it pulls back to this zone, then you might want to consider entering the trade there as well. So you have 2 areas that you want to pay attention to, right? So you actually would enter the trade at the close of the candle. So like I said, it's 2 hours before this candle closes. So you can set your clock for a 2-hour duration, okay? So that's a 4-hour. Now let's go down to the 1 hour and see what's going on. As you can see, there are blue candles, okay, bouncing off of the fair value gap, okay? And if we go down to the 15-minute, you'll notice that there's an incline going up. And like I said, you would execute your trades during the 15-minute or the 5 minutes. So if we saw this bullish engulfing candle, right, and we were in the 15-minute time zone, you'd wait for an opportunity for the candle to show its hand, so to speak. So this is the bullish engulfing candle, which is a candle bigger than the candle before it. Okay. And it came all the way back down, right? And hit the, we can call this area the support area down here. It's called the support area. Bounce off support and continue and made higher highs, right? So you would enter the trade down here somewhere, okay? And ride this little pattern that you see right here, which is a continuation of the uptrend right here. Okay, so off the 15-minute, that would have been a winning trade for you. But at the same time, if we go down to the 5-minute, we notice the same thing happening here. Bullish engulfing candle, a pullback, came back down and almost touched support. Another bullish engulfing candle, okay, came back and almost touched support and then continued trending higher right there. Okay. So in your trading plan, you want to put execute trades after you see a bullish engulfing candle. Okay. So once you see a bullish engulfing candle, just be mindful that it's going to be a pullback, because again, this is a pullback right here, and you just try to anticipate getting into the market as it tries to make a higher high, which is this high is higher than this high over here. Okay. All right. So let's recap. We go to the weekly. What did we say that we saw in the weekly? First question you ask in the weekly is, what trend am I in? Okay. We've already analyzed that and said we're in an uptrend. So put that on your trading plan. First question, what trend am I in? Uptrend. Second question, okay, is going down to the lower time frames, which is daily. Okay. And since you see a slight little pullback, you want to say, okay, where is the fair value gaps? I want to find the fair value gaps within this trend. Okay. And we found, well, I found several fair value gaps off the daily, okay, off the 4-hour, off the 2-hour. You can find those gaps in those lower time frames. And then you pretty much wait for the bounce off the fair value gap. Once a bounce happens off the fair value gap, that's where you would consider entering the trade. Okay, but you have to learn how to identify and find fair value gaps, demand zones, supply areas, things of that nature. You got to find what those zones are and how to locate them. Again, I did teach on that. If you go back to my YouTube channel, take a look at what is a fair value gap. Take a look at what a demand zone, trading off a demand zone, trading off a supply zone. Okay, because like I said, you got to go with the trend, and you want to bounce off those zones. That way you can, ride the market higher. Okay. All right. So if we go back to this here, trading goals, what you aim to achieve. Okay. So how much money you want to make in the market? What's your learning objectives? Okay. Is it $50, $100, $200? You write that down. I would like to earn $50 per day in the market. Okay. $30 per day in the market. Because after 10 days, if you make $30 a day, you made $300 a week. Okay. Well, 10 days, that's 2 weeks, right? Risk management. How much capital will you risk? Are you going to open a live account? I would recommend starting with a demo account with a small amount that you're considering risking. So if you only have $100, open a demo account with $100. If you go to my website, you could create a free demo account with my recommended brokers. And the brokers that I recommend on my website, go to metrofxtraders.com, HTTP, put that in front, or go in the description area below the video, click to go to my website and open up a demo account. Okay. And open a demo account with the amount of money you're willing to risk, and then practice trading that demo account to a point where you become a profitable trader. So you won't go live until you're profitable, consistently profitable. Okay. So practice in the demo account. Then entries and exits. Let's talk about entries and exits. We didn't talk about that yet. Let's go back to the chart. So we're going to execute a trade off of let's go back to the 15-minute, actually the 5-minute. If we're going to execute a trade in the 5-minute, right? Like I said, I normally like to go to the 5-minute and or the 15-minute to execute or enter into the market, right? So let's say we saw, do a timestamp replay for you. Let's say we're right here. Okay. Click play. All right. Went too fast, but let's say, let's go back. Do it again. Instead of 3 times, we'll go 1 time. But let's say we're looking at the chart, we're analyzing what's going on. We notice the market created a bullish engulfing candle right here. Bullish engulfing candle. So you would enter the market right here off of the close of this candle, the beginning of the next, right? You would set your stop loss below, it's below your entry, okay? And you want to shoot for, you're going to enter here, and you're going to shoot for the next level, okay? The next level above. Okay, so you can shoot for this level here on the left. If you look left, that's your exit. So once the market gets here, you're out of the trade, or you can shoot for this exit on the left here, and then you pretty much want to set your levels. So this would be a 1 to 2. Let's say this was a 1 to 2, right? So this is your stop losses down here. You do the trade right here. And you're shooting for a 1 to 2. Okay, let's click play. So all we're waiting for is the market to get to the levels. Now, if you had set your stop, your exit point right here, you would have a winning trade, right? Okay, but the market is live right now. So if I were to enter the market at this level here, right, and I'm shooting for 1 to 2, I'm waiting for the market to get to this level to exit. But typically, you want to shoot for the very first level on the off the left. So once you have done that, you would have won this trade right after the entry. So that's 1 candle, 2 candle, 3 candles, and you would have had a profitable trade. And this trade would have been pretty much, a winning trade, but it's not exactly a 1-to-1. But nevertheless, you still would have made some money off of this trade. Okay. Or you would have held on to the trade and just wait for the trade to get to this area here. Okay. Now you set it and forget it. You don't want to adjust your stop loss. You don't want to adjust your take profits. Okay. So that's pretty much your entries and your exits. Right. And we'll go back to this entry exit strategy, currency pairs, pick your favorite pairs. What we just analyzed off the charts with technical analysis, but you also want to dive into fundamental analysis. And fundamental analysis, if you go back to my website, you click on Forex Factory, you click on there and it'll tell you the news of what's going on with that currency's economy. So if you're trading, British pound versus the US dollar, read up about GDP, read up about trades, read about taxes, read about things of that nature. That way you get an understanding what's going on globally within that currency pair. Time frames, we talked about analyzing the higher time frames or the lower time frames. Okay. And you want to make sure the time frames are aligned with each other. So if you see a uptrend on the higher time frame, but you see a pullback happening in that time frame, what you want to do is go to the lower time frames. The minute you start seeing a reversal of that pullback, that's when you want to consider entering the market off of what candle? The bullish engulfing candle. So that's a really important candle to pay attention to. Trade psychology. How will you manage your emotions? Trading is 95% mental, 5% execution. So you have to make sure you manage your emotions and you maintain discipline. Okay, do not get emotional. Try not to anyway. It's not easy because when you have skin in the game, it's really, really hard to maintain your emotions. But the trading will reveal who you are. Are you anxious? Are you impatient? Are you stressful? Because when you start seeing, the trade going against you, you start feeling some sort of stress, anxiety. So those are the things you got to manage going forward. You want to just set and forget it and try not to, focus too much on what's going on in the market. Just focus on the actual execution. Okay. Record keeping. Now, if you get a winning trade, try to jot it down. When you entered, when you exit, and how much pips you earned in that trade. Then analyze it. Perfect trade, winning trade. Why was it a winning trade? Certain things on your parameter list, your rule list, your trading plan happened, right? Number one, upward trend, retracement, guiding off the fair value gap, right? Once the fair value gap was penetrated or, came to that area, you saw a bullish engulfing candle and enter the trade after that candle closed, right? And then you set your stop loss below, take profits above, and you set it and forget it. It's simple as that. It doesn't sound complicated at all. If you rewind the video, just rewind it and then write that down or make it part of your trading strategy, your trading plan. Okay. So yeah, we talked about a lot of things. So make sure when you write your trading plan, you write your goals, you write down risk management, try to risk no less than 1%. Okay, no more than 1% when executing trades. Do a 1-to-2 ratio, 1-to-3 ratio. Grab the bag and get out of the market. Okay. Some people would place more than one trade, close out, move their stop loss to break even, and let the trade run. That way, if it reverses and hits their break even point, they didn't lose any money or make any money. Some people, once the trade is above their level of entry, they'll, shave off at least 30% off the trade. That way, they make 30% and then move their stop loss at that level and continue to let that trade run. All right. And close out the remainder 70% once the trade gets to their profit target. That's another strategy. Okay. Some people do that. All right. So, once you're in profit, try to take some money off the table and let your runners run. You could have one trade in, 2 trades, 3 trades. Try to do at least 3 trades a day. Okay. To help you hit your profit goal. And we talked about that. What is that goal? Is it $30 a day? Okay. $50 a day? $100 a day? Okay. And you just take your trades based on dividing that amount by 3. Okay. So if you're looking to make $100 a day and you place 3 trades, you want to at least make $33 per trade. It's pretty much $99. And hopefully you get that extra dollar, right? But $33 per trade, 3 trades a day is $100 a day. Okay. And then we talked about entries and exits, talked about currency pairs, time frames, trading psychologies, a lot of great books on trading consolidation that you should read. That way you can maintain and train your emotions to not be, frightened of the market. Um, Eliminate, impulse. Uh, Eliminate, FOMO, fear of taking action. Eliminate, revenge trading. If you lose a trade, stop trading. Take a step back, analyze the trade before you execute another trade. Okay. And winning trades, you get your winning trade, you're done for the day. Okay. And keep copious records. Okay. That way you can go back in time and analyze what you've done well and what you've done poorly. Okay. All right. So with that being said, I'm going to go ahead and close out this video. And thank you so much, everyone, for watching this video, because there's a lot of great things you'll learn when you come to my channel, and hopefully you found value in what I just shared with you today. If you did, give me a thumbs up and also share this with one of your friends and colleagues. And don't forget to join the trading, um, the academy that I'm promoting. There'll be a link in the description. Just go to the academy if you're new to trading and you just want to learn more at your leisure. Join the academy. The academy will give you a lot of the meat and potatoes to help you become a successful Forex trader. All right, y'all. Thanks so much for watching. You have a great, great, great weekend and have a successful week in the markets. Take care and bye for now.